Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics on a rather special day in history. Certainly because of the things that have happened in the past couple months, let alone the past decade. Quite a bit of history, and also a lot of things that don't often get out there and are unknown. And tonight we will, in honor of the anniversary and also certain information that's come to light about recent events, I thought it would be appropriate time to notate this in a proper way. And over the last week or so, I've been constructing a letter that will be sent to Commissioner Benham of the CFTC, I don't know, either tomorrow or in the next couple of days. I'm going to read it tonight. Also going to send it to the other stakeholders, the investors, the mining companies that go and dig silver out of the ground. And I think they've been cheated out of billions of dollars. All the people whose lives are involved silver, whether it's the companies, the people who purchase products. My only goal was ever to get truth and explain what's going on and try and figure out why the price never made much sense. And again, along the lines of, I'm not trying to go and give anyone a hard time, and at least give people the opportunity to know what, if I have evidence or think that there's something inappropriate, at least give them the chance to address that, which I'll do for Commissioner Benham tonight. But with that said, how about we just dig in? We got a couple pages on this one. It ended up being a little longer than expected, as is often the case. And I will play the clips of Commissioner Benham, his comments that I discuss. A lot of highlighted video clips through for now, although the description link, where if you want to go through this file and click away for yourself, will be in, the link is in the description field below, so you can click there if you, after we're done going through it tonight. So, whoops, that is not the right file. That's actually the one that I submitted. That was one of the rounds of evidence I submitted to the CFTC. So, un momento here, we'll get that pulled up. And then we will begin. All right, so there we go. Appreciate everyone's patience. And now let us click back on that one and we will start reading. Let's see here. There we go. All right. Our window a little bigger. Dear Acting CFTC Commissioner Benham, I'm seeking clarification on the recent comments you made regarding the activity in the silver market in early February of 2021. A video posted on March 18th from the International Futures Industry Conference, you made the following statement, although rather than read that, I do have that queued up, and at least, as I mentioned, for his parts here, we'll actually hear what he said so that there is no confusion. So here we go.
Well, I do want to come back to these markets, and the CFTC put out a public statement around the silver markets, and you're keeping a close eye on that. Can you follow up on what the CFTC may be doing in regards to this rise of retail participation, making sure that these important vehicles that we talk about, futures and options, are accessible to the retail participants, but also with the proper risk disclosures and the proper oversight of those products. So give us some thoughts on how this phenomena is impacting the CFTC.
Yeah, thanks, Walt. It's a great question. It's something that I've been thinking about, and the events around the silver markets happened shortly after I took over. I think in late January, and I think it's important to distinguish what an equity space with what happened in our markets, in the future space, specifically with the silver contract. And in many respects, the resiliency and the market structure of the futures market really were able to tamp down what could have been a much worse situation in this.
So I thought that was a rather unusual comment from the commissioner of the CFTC, and let us hop back into our letter here. Resiliency in the market structure of the futures market was able to tamp down what could have been a much worse situation in the silver market. And on behalf of over 51,000 silver investors, market participants, silver industry stakeholders, that 51,000 number, that's the number of subscribers to our channel, silver mining executives, bullion dealers, institutional investors, and analysts who follow my research, specifically the evidence of manipulation in the silver market that I've uncovered, trying to understand what you meant by your statement. What specifically was it that the structure of the futures market tamped down, and what was the much worse situation that was avoided? In his comments, he also stated a few other things. So we'll go back and pull up our video there. And now that I have my notes, I even know what time it starts, which is pretty slick too. Let me make sure I have the share audio button. We do. So here we go.
Entirely, we have sort of history and precedent in the future space. You know, we have a match order book, don't have rules. We have T+1 settlement. The clearing infrastructure as a general matter historically within the future space is built in, and very strong initial margin, daily mark to market, position limits. All of these things together, I think, really were very effective in managing what was at some point in those few days in late January potentially a challenging situation, and give credit to the exchange for utilizing its authority and some of the tools it has within the margin space to control the sort of the price and the volatility of the silver contracts.
Now, it cut out for a second when he said who actually did that. I'm assuming it was the agency. I guess another one of the questions that I will just invite him to comment on. Not that he owes me any, right? I don't know, I guess I'm a taxpayer and I'm a constituent, but not that I necessarily expect he's going to answer, as we will get into. But I'm just saying these are the questions that I have, that many of my viewers have. And let us continue back on in. What was the challenging situation that he was referring to, and why was it necessary to control the price and volatility? If investors were buying silver and the price went up, isn't that what's supposed to happen? Given that your role is as a regulator, not a market maker, fund manager, or lobbyist, what is the outcome that would represent such a concern to the interests of a regulator who's simply tasked with ensuring free, fair, and orderly market? For the past decade, and even in the time since the CFTC ordered JP Morgan to pay a $920 million fine for manipulating the precious metals and treasury markets on hundreds of thousands of occasions, there have been numerous occasions in which the price of silver has fallen substantially on heavy volume, at times when there was no known news or development, yet there was no intervention. So why was it necessary for anyone to utilize their authority to control the price simply because it was rising? And with what authority is the CFTC controlling the price and volatility, if indeed he was referring to the agency in his comment? These are just the questions I have. And if this is actually what the agency is doing, then it would certainly seem within the bounds of the transparency you've discussed. You mentioned several times, we'll play that in a second, that at least all market participants should be aware of how and when this happens. The agency did act to control the price and volatility, as your comments suggest. Are there other occasions in which this has happened? Has it happened before in the past? How do investors know if this will happen in the future? So if people buy a lot of silver this weekend and the LBMA gets scared again and the price goes up, is it possible that it could be tamped down? I think these are reasonable questions. Could CFTC regulatory action explain some of the many other occasions in which the price appears to be capped? Large amounts of futures are dumped on the market at the same time. Of course, I don't know if there's ever been a better example. Here's February 1st. You see the price goes over $30 in the futures contracts a couple of times, then incredibly heavy volume right as the price falls. And as we know from what former CFTC Commissioner Bart Chilton confirmed, he discussed how this has been an ongoing, this is what he called spoofing. I don't know if spoofing in the way they define it is the best way to describe that, but That's what former Commissioner Bart Chilton on video called spoofing, and what you saw on February 1st into February 2nd. Now, here's the agency's mission statement saying the mission of the Commodity Futures Trading Commission is to promote the integrity, resilience, and vibrancy of U.S. derivatives markets through sound regulation. But where in that mission is the CFTC given the authority to control the price or the volatility? And even if the CFTC somehow did have that authority, that would mean that the CFTC has the ability to cap the price, which would by definition mean that this is not a freely trading market as advertised. While you may or may not like these questions, which are based on the evidence I've submitted both in this message and in the submissions I made through your agency's whistleblower program, they're the questions that are shared by thousands of your constituents. Again, you can see there's links to everything in here and let you explore them on your own. I can assure you this is not just me, but just so as to not leave any mystery or confusion or room for confusion, here's another well-researched and well-regarded gold and silver analyst who points out his own concerns about the CFTC. I think that's a link to Ronan the Destroyer's piece there. So see if they ever dig into that one. So where is the transparency that you keep promising? And I'm going to pull up the clip here because this will be the last clip that we will play tonight. But I thought it was worthwhile because he spoke many times about the need for transparency, which certainly I would agree, although what my issue is that done kind of the opposite of that, but here you go.
Account or otherwise, and then having access to trade leverage markets in the matter of hours. And those are the types of things that I'm thinking about, because we want the investors to have a level of education, certainly around our market, understanding the risks that are associated with it, certainly because they are leveraged, certainly the disclosure element, making sure all the information is out so that the individual will know risks that he or she is taking when they allocate capital or when they invest in our markets. Certainly from a risk management perspective, this is a great way access for investors, but we have to be the way technology is changing and evolving, and we have to change with that. We can't rely on our old rule book or old way of doing business, because the world has changed, investors have changed, access to information that they collect, via the internet or otherwise, or chat rooms has changed, and we need to be mindful of that. So those are the types of things I'm thinking about. I want to be open and fair and transparent, but I also want the disclosures and the guardrails to be there that are strong, are very clear, so that investors know what they're getting involved in. And quite frankly, that there are going to be certain individuals who shouldn't be trading in our market yet.
Well, that was interesting. Certain individuals who should not be trading in our markets. A little bit later in this report, you'll see that I asked whether JP Morgan fits that qualification. Because I wonder what else would you have to do to reach the point where a bank can't trade in the market. But I want to be open and fair and transparent so that investors know what they're getting involved in. That's his quote. I would certainly agree and support that. And as you will see, I raise my questions of why I don't feel that that is what has happened. So I'm going to check and make sure everything is going all right in our live stream, which it appears that it is. So with that said, let us dig back in. So wants to reach some level of education or understanding of the risk in leveraged markets before putting their money. But if you have to cap the price, and most market participants were unaware of it before it happened. And so when I found that video of his comments, there were only 90 people who had seen that. So I would suggest most market participants are unaware of that even after it's happened. He sent a press release February 1st saying he was investigating silver as not, I'm not sure if this went out in a press release. I don't think so. Anyway, to me, that's not a transparent market, because if any group, regulatory or otherwise, can tamp down and or control the price, While the majority of the market participants have no idea it's coming, not only is that the antithesis of a free market, I mean, that's price fixing. That's, and you can have George Bush say it, or Dick Cheney, or Richard Nixon. Dick Cheney's book, he talks about Richard Nixon. Same chapter, he talks about how they do the price controls, and it was a bunch of Cheney and Rumsfeld duking it out over how much people could raise prices, and then accuses Nixon of being a great free market thinker. But anyway, I call it price fixing. On one hand, I'm assuming that the CFTC would never be involved in price fixing the silver market, although I'm unable to extrapolate what else you could have actually meant by your comments. As I've discussed this with other market experts with extensive trading desk experience, they have also been unable to come up with another explanation, which is why I'm seeking clarity. Because if the agency took action to control the price and volatility, and there is a market structure that in place that tamps down the price when customers buy, all, not just some silver market participants, who are also the constituents that you've sworn an oath to protect, have a right to know about it. Are you hearing what your constituents are expressing? It's also worth noting that if you look at the comments on your Twitter feed, such as here, and there, you'll see that I am hardly the only one who has these questions. You can see similar comments on the other CFTC's commissioners and also their main account as well. Is anyone monitoring of investors and silver market participants watch my show on a daily basis, specifically because they're seeing the exact same things and they have the exact same questions? And frankly, I have a feeling that as more people in the silver industry become aware of what you said in that interview, as well as the other evidence laid out in this report and in the evidence submissions I made through your TCR program, that they would have the same questions too. So how can the investors, business owners, shareholders, and various stakeholders whose lives and businesses are dependent upon the silver market get answers to these questions? How will they react when they realize the CFTC has been sitting on the evidence? On February 1st, you announced that you were closely monitoring recent activity in the silver markets and that the Commission is communicating with fellow regulators, the exchanges, and stakeholders to address any potential threats to the integrity of the derivatives markets for silver, and remains vigilant in surveying these markets for fraud and manipulation. Maybe that's the issue. They were looking at the integrity of the derivatives markets, but ignoring the commodities. I'll stay on track tonight. But if something happened that you were that concerned about, sorry, typo there, but how come you didn't say anything about it until a month and a half later? And what has also been left unsaid is that I submitted 2 detailed rounds of evidence through the CFTC's TCR whistleblower program that explained exactly what happened. In fact, the first file I submitted on February 12th actually explains how the price of silver fell 10% on February 2nd, despite such an enormous surge in buying that the LBMA was worried they were weeks away from running out of silver. And in the face of many metrics showing that February 2nd may well have been the single greatest day of silver demand in the history of planet Earth. Yet, while your agency remains unable to explain that, let alone even acknowledge that they see anything wrong with it, you've also been sitting on 2 rounds of evidence that do have the answers, but you refuse to talk with the guy who sent them to you. Even months later, your agency is still allowing what's become an almost daily crime, even though you've been sitting on the evidence since February 12th. I reported it to my audience as it was happening, and then it only took another few days talking to lawyers so that I could submit it to your office. Yet 3 months later, your agency acts as if it can't even recognize that anything was unusual with what happened on February 2nd, despite how you actually opened an investigation into the silver market just 1 day earlier on February 1st. You talked about price controls at a futures conference, but you can't confirm if you've even read the evidence I sent. I've followed up with your office on multiple occasions to see if anyone has even looked at the evidence I've sent, as I've watched and detailed the same crime that has amazingly occurred on multiple occasions, even since the one described on February 2nd, yet I've been consistently told that the CFTC can't even confirm if they've looked at the evidence because it's an open investigation. But then how is your agency really that sensitive to keeping this information private, the investigation private? How is it that you're able to talk about it at a conference that most of your constituents didn't attend, and then you reveal how the price was tamped down and controlled on a show that had 90 views before I showed it to my audience? You can comment to a trade group, and this was from their page, whose membership includes clearing firms, exchanges, clearing houses, trading firms, and commodity specialists. But you can't talk to the people you're supposed to protect, that you swore an oath to protect, or the person who submitted the evidence to explain what your agency can't. Are these some of the groups that were facing the consequences of the much worse outcome that Commissioner Benham described? Yet despite all of that, here's the part that is amazing to me. The price of silver is actually lower. It was actually lower than when this all began. So all that surge of buying, we'll get to the LBMA, but the price, people buy, they're about to knock the system offline. The CFTC regulator confirms how scared he was, but somehow the price is lower. Does anybody else see anything? If you have historic buying, but the price goes down, what's the point of having a market? Unless it's to enrich the banks. Does that seem odd to you, Commissioner Benham, or anybody else? Do you understand why there's an overwhelming majority of the silver market that's having a harder and harder time believing that the CFTC really has any intention of honestly regulating this market? Even now, as you read this, has anybody yet reviewed the detailed evidence I sent that actually explains how the price of silver fell in the midst of likely the greatest surge of buying in the history of silver trading? Is there any way you can explain that to the constituents you swore an oath to protect and serve? Fortunately, many investors were able to be aware of what was going on since I took the time to make videos about all of these topics and explain them in great detail, while I also wrote up the evidence and submitted it to your office just days after the crime. Fortunately, the LBMA actually explains what everyone was so afraid of, because Commissioner Benham's comments indicate that the fundamental principles of a free market were somehow prevented from functioning in order to avoid what you labeled a much worse situation. But a much worse situation for who? Thanks to the recent LBMA silver report, we now know that investors were buying so much silver that the LBMA actually feared running out of metal within weeks. As the social media frenzy gathered pace in late January, demand for coins, bars, and ETPs, that's exchange-traded products, more commonly known as ETFs, think SLV and the other silver trusts. For the latter, being the ETFs or ETPs, global holdings surged by 119 million ounces in just 3 days. Remember, that's 119 million ounces in just 3 days for the exchange-traded funds. That's not counting coins or bars or physical metal. You know, why would that be important to the LBMA? This was concentrated in the iShares fund, SLV, where holdings rose by 110 million ounces, actually 118.4. But given that most of the metal was allocated in London, fears emerged as to whether there was enough silver should the demand continue at this pace. So again, before we go to the next page, sorry, I don't know. Some people will find this funny. Some will be shocked by it. It's Saturday night, so I'm going to try and make you smile a little bit. But let's remember this. 120 million ounces allegedly into SLV and the trust alone. And then you saw on the channel how much you were probably buying it at home, the physical stuff. And how much was left? As of the end of February, blah, 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 leaving 360 million ounces of potentially available metal. So just the ETF demand alone, you know, you get another three period days like that, 3 more times, that's gone. And we have some quotes. Andy Schechtman and Miles Franklin said that was by far the most silver he's ever sold in a single day, by far the most call volume. And I don't have official quotes or data, I mean, from every other business, but I do have the link to Michael Whitmire, who was on, JM Bullion was on CNBC on February 1st. I'm sure that happens all the time. He announced that you can watch what he says. So is this the demand that the futures market had to tamp down in order to avoid a much worse situation? Yet here we are months later, and while the frenetic buying pace has slowed, the dealers still report elevated activity and product delays, yet the price is actually lower. And I'm so excited for everybody to see this next part, truly special. Well, this part too is truly special, but the chart, because I've called JP Morgan, Goldman Sachs, and iShares SLV, and none of them can explain that. Now here, check this one out. You can see on the chart here in the red line on January 28th. So that was the day before this 3-day period. So here's the red line. That's, as you can see up there, January 28th. So you see there was a little surge, actually went spoofed upward that day. I'd love to get access. If I were the CFTC commissioner, I would check and see who did what. Well, around all, in fact, I do that every day. That's the whole point, to monitor the thing, but we'll leave that aside. So anyway, you see here on the 28th, the price is over 26.50 at one point, right? Yet 3 days later, after investors purchased so much silver that the LBMA confirmed that London was weeks away from running out, and depending on how much physical coins and bars were actually purchased, if we knew that actual number, it might not have been weeks. It could have been days. A day before several, anyway, so after 3 days of that, also a day before several ETFs changed the language of their prospectuses to include legal language specifically protecting them against a short squeeze, and even went as far as to confirm that there are indeed hedge funds and large banks with substantial short exposures to silver. Hey, I'm not making it up. You can click there and go to SEC and SIBR's prospectus. And at the same time, you yourself, Commissioner Benham, described a challenging situation that required price control to avoid a much worse situation. Then at the end of that, look, here's February 2nd now in the blue line. There's the 26.50 mark. So, and then, I mean, even you go for, then it's down below 25.50 on the 4th. So if those buying conditions, what would Commissioner Benham, what would you say to someone who buys COMEX future contract? If you have historic buying, I mean, David Morgan looked like he was going to fall out of his chair when he did that roundtable. What was it, Sunday the 31st? Bill Murphy, they're like, the Hunt brothers wasn't like this. And then the guy opens a silver investigation the next day. Then this happens. And the price is lower. And all he says is that, yeah, well, thank God the price got tamped down by the futures. Although I don't think it was just random futures market activity. As we will get to, come on, you knew Jeff Legend was getting a shout out in this one. Jeff Christian does not make it into this report. No, I'm honored to get a shout out at his channel this week. I started making a video with my comments about that, and then I remembered it's actually important stuff to do here, which we will get back to now. In other words, after panic buying that had the paper silver market, in the LBMA's words, within weeks of being fully exposed, the price went down. All right. How would you explain that to your constituents, Commissioner Benham? If the kind of buying demand we witnessed over January 29th to February 2nd, if that's not sufficient to put the price of silver higher, what is? What do you have to have happen? Like Goldman Sachs announced that they're getting long? The physical dealers sold so much product over the weekend of January 30th to 31st, they had to suspend sales until the futures market opened because they had sold everything unhedged piece of silver they had. I'm not making it up. That's JM Bullion. It happened while we were doing a roundtable that weekend. JM Bullion, SD Bullion, and Miles Franklin the next day, they couldn't sell anything. People couldn't buy silver because they ran out of what they had hedged. And a lot of them got their clock clean. These guys actually tried to serve their customers, even though they could tell, well, there's a good chance the future's going to end up a lot higher. We can get torched on this one. Not quite how JP and Jeffy and the Goldman gang do it, but spend sales until futures open on Sunday. Since almost every dealer had sold out of their entire hedged supply. On Monday, February 1st, as mentioned before, COMEX futures price broke above 30. Apparently, silver futures getting above 30 is what it takes for a bullion dealer in the U.S. to make it onto CNBC. And here you can click on the link here. Michael Whitmire talk about how the dealers were being overwhelmed and wiped out of supply. Meanwhile, my friend Andy Scheckman gave me this quote. February 2nd was the most silver we have sold in 24 hours and the most calls we have ever received in a one-day period by far. Had we had the online capacity, I'm sure we would have done way more. What did the price do that day? It fell 10%. Actually, this is fun. Let's deviate a little. All right, now we started this. Let's have a little fun. Okay, yeah. there's what happened February 1st into February 2nd in the face of that. I'm being transparent. Here's another thing. I'm not a lawyer. I'm a guy who worked on a trading floor, who sit here, study silver. You know, I'm able to say this. Every time CFTC, full of lawyers, they don't want to talk to people who have market experience, but legal investigation. Okay. How come I can, I put my name and face on it every day and say it out there. And I wonder, well, we'll see how that goes. But I take that risk of saying that because I believe somebody needs to say it. Unfortunately, there are other people in the silver industry of great courage and say it as well, and I'm grateful for them. So, including Andy, who talks about how remember I did an interview. I showed me that notebook that night of how they couldn't keep up. It was taking days to call those people back. The price of silver falls 10% one day after Austin Benham opens an investigation. The only thing announced since then is that they controlled the price of volatility. Okay. Yet after 3 days of record buying that had the entire bullion banking industry afraid that they were within weeks away from running out of silver, the price went down. And this decline happened just one single day after you announced you were monitoring the silver market for fraudulent activity. Of course, it's also worth highlighting that the decline began the morning hours surrounding the public release of JP Morgan's silver sector downgrade, which arrived at 4:59 a.m. Eastern time. An article that never actually offered a reason for why JP Morgan was downgrading the sector or an explanation of how they felt it was appropriate to downgrade the silver sector, while they were simultaneously in the middle of allegedly adding the single greatest amount of silver in the history of silver trusts. So it's not like, 1980 or, 2012 or sometime before. So when Jeff Curry went on TV and said, he didn't think this was a big deal because the flows into the ETFs weren't that big. I mean, there you go. There's the record-setting spike. Commissioner Benham, is it fair to say that Jeff should either be fired from Goldman? Because that was a costly mistake. That statement, as well as the other things that we'll get to. But there's this spike here. These flows that almost hit the 60, despite, you barely see a number above 20, except you had 34 on Friday the 29th. But to Jeff, they're not that big. Okay. All righty. Can your investigation explain this, Commissioner Benham? Mine can. But what you said in your interview seems like incredibly material information that's relevant to the integrity of the silver market. And I ask you now, in a message that is also being shared with the other stakeholders in the silver industry that ask me these same questions on a daily basis, can you explain the comments you made and how they fit in with this evidence that your agency has been sitting on for over 2 months? Well, I guess, let's see, half of February, March, April. Okay, still 2.5 months, we'll call it. Might add, the same spoofing crime that your own agency has fined several banks for in the past year, including JP Morgan of $920 million, not only continues on a somewhat regular basis, perhaps the most egregious example occurred just one day after you launched your investigation. By the way, I don't know about the definition they give for spoofing. I never heard of that when I was on the trading floor. I didn't do it. I never heard of people doing it. Maybe they did it and didn't tell me. I would call what happens more hammering the shit out of the bids. But what I found interesting was when I described to Bart Chilton and said, hey, my understanding is that, right when you get around like the 30 level, for example, you nudge a little bit, then you can hammer because there's no locate. You can sell it against the banks. You can't, but the banks can sell as much as they want. Bart Chilton's like, yeah, it's a great description and talks about spoofing for 3 minutes and then says the only difference between then and now is that now when it happens, the moves are a lot bigger. So I don't get caught up in the semantics of spoof or their definition. Frost and Benham or one of the other commissioners want to discuss what Bart Chilton said, they would be the first from the CFTC. But Commissioner Benham's comments seemingly indicate that rather than being infuriated by the constant spoofing that seems to happen, He condoned it, if not even facilitated it. Of course, this isn't the first time this has happened with the CFTC and silver. Of course, this isn't the first time that something like this has happened with the CFTC in regards to the silver market, because former Chairman Gary Gensler closed an investigation into silver manipulation in 2013 with a press release that stated that there is not a viable basis to bring an enforcement action with respect to any firm or its employees related to our investigation of silver markets. Keep in mind that when he said that, that investigation took place over the exact same time period where the CFTC, same CFTC last year, announced they had found hundreds of thousands of violations of their own rules. Now, Gary Gensler is heading the SEC. I'll leave the irony of that for you to enjoy and ponder on your own. But even if there were some things that might have been hard to see back then, how does the following excerpt from the CFTC's press release fit with what former Commissioner Bart Chilton revealed when I interviewed him in 2019? From Gary's release, the complainants generally asserted that because, this must be the keyboard thumpers like me, that because the prices for retail silver products such as coins and bullion had increased, that the price of silver futures contracts should have also experienced an increase. By reference to publicly available information concerning large traders with short open positions in the silver futures contracts, the complaints also alleged that the large shorts in the silver markets were responsible for lower futures prices. All right. Bart explained how Commissioner Benham confirmed it, and the LBMA told us they were running out of metal. And in the prospectuses, plus on the COT report, they show you either that they're afraid of the large short positions being exposed, or in the COT report, you can see just how big they are for yourselves. Gary Gensler, if you would like to appear on the show, email me through arcadiaeconomics.com, please. But what most in the public don't know is that it wasn't that Gensler's investigation didn't find any evidence of silver price manipulation. No. Rather, as Bart Chilton made clear in his interview, he found plenty of inappropriate trading activity and felt the CFTC had the evidence, but then he went and saw their forensic economists who said they didn't have enough to bring the case. You can watch it later on your own here. Bart also describes how he was so disturbed by the initial decision from the CFTC's forensic economists. He was like, no, this is incredible. No, we have it. That he actually appealed to have the legal definition of what constitutes manipulation changed. And he further states that had the new standard been in place at the time of 2008 through 2013, he thinks that they would have been able to get a conviction. Now, here's a challenge. Can anyone actually watch what former CFTC Commissioner Bart Chilton says there and say with a straight face that none of this information was material or substantial? It's not like Gary Gensler never reported this. Keep in mind, here's this part's great. Keep in mind, these revelations came after Chilton left the CFTC, which means that the CFTC or any of the active commissioners have still to this day never commented on any of this. I don't know, I'm aware of. I can't find it. Nobody I know can find it. And yet they talk about the price being tamped down. I assume the agency or maybe someone else who, I don't know, is there somebody else who's controlling the price and volatility? I can guess who it is. But then no one's ever, I had to go track Bart down and he had already left the agency. Maybe you can't say it when you're in the agency. Always all right, we waited with 5 years for Gary Gensler. Open investigation. He says he found nothing. Here, you can watch the clips for yourself. Bart found plenty. Bart even, look at this. Bart was even able to get Congress to act on it. He got them to change the friggin' law. He was that concerned. He said, he talks about how he spent years doing it. They actually changed the law. But the transparent CFTC, nothing, no comment on that ever. How about this? We'll pause and wait for someone to find where the CFTC has commented on this, beginning now. All right. Well, I can't wait that long. Let's finish the darn letter. Saturday night go. Hopefully somebody's going to go out partying after this. Anyway, so where were we? Yeah, no one's still never commented. So never. Maybe maybe we could ask Keith Tarbert or one of these guys who's left and gone to a law firm, or maybe if I ever maybe if I have a government agency, somehow say like that. Accuse me or Reddit or the Wall Street keyboard thumpers of something, we can get Tarbert or David Meister to defend us. Or does he only defend bankers when they're charged with things and not, I don't know, questions I have. Can you understand why it's becoming increasingly difficult for your constituents to believe that you're really trying to honestly regulate the silver market? Will you offer any comment on any of that now? Because this isn't an open investigation. You can talk about the past. Hey, you only got 90 views on last comment. I will invite Commissioner Benham on the show. I'll be polite, civil. We'll just sit here and ask these questions, and you can answer any of them we choose to. Can you talk about any of that stuff? Can you offer your constituents any opinion on what Bart revealed and whether the agency's lack of comment is in line with the full transparency that I spoke of? The CFTC commissioners actually blocked evidence during the period when they missed it. That's another thing Bart mentioned. I've not heard any comment. Has anything been done? Have someone addressed that? Commissioner Chilton also talks about how disappointed he was when he found out the other commissioners actually started blocking evidence that was sent in by the public. So it was during the investigation that Gensler closed that your agency then found hundreds of thousands of infractions of 7 years later. So I'm wondering, is it possible that the crime could have been caught earlier had those commissioners not blocked the evidence submission? I mean, it could have been sitting in those emails. Even when the price was going nuts, and I mentioned my little option bet I had on, it went from 27 grand to 200 grand, and then when I got capped, I think I burned through that whole thing over the last couple months. So, all these, all these things that they're monitoring that was happening in my life. I was able to go or get help when hundreds of people were flooding my inbox with evidence, and I had someone help. If there's anything to see, make sure I get it in here. If someone's just saying something else, it's not that urgent. Sound of silver. So anyway, I don't know. Maybe like that could have been avoided. I was able to figure out how to do all this stuff, report the evidence, give it to the CFTC in 10 days. Just saying. We're on year 41 now. Anyone in the CFTC want to talk Hunt Brother time period? I'll put some silver on it. I'll pay silver to talk. Can anyone from the CFTC, active or retired? I got 100-ounce silver bar. I want a commissioner, though. It has to be a commissioner. If they agree, I will give you a 100-ounce silver bar just to talk about any of this. Anyway, so I don't know. It could have been caught if the commissioners hadn't blocked the evidence. Seems like a reasonable question. Do you see why so many of your constituents are a bit alarmed by your comments on March 18th, given that the only thing your office has been able to tell me is that they can't even tell me if they've looked at the evidence I gave them? So you can say this to the Boca Raton Futures Conference. But the guy who's like can actually explain it, I mean, it's not like they're like, oh, holy shit, this guy figured it was nice of him to write it down, send it to us, but at least if there's no passport, COVID passport or anything like that, or you need like the thing. One of my friends got the tester, said he felt like it was poking his brain. If that's not required to get to the Boca Raton Futures Conference, I'll go next year. All right. So anyway, is that concerned? He can't tell me if he's received the evidence, but Boca Raton, I wonder if you had a ticket to that one. What other gems were released? This was only, I mean, did he say something like CFTC's Giancarlo, who talked about popping the Bitcoin bubble with futures? Where did he learn that? Okay, when Chris Giancarlo talked about popping the Bitcoin bubble with the advent of futures, was that the same market infrastructure that tamped down that one? And by the way, how well that worked out? They popped it when it was 20,000. Now like 50 or 60,000 last I checked. Can't wait till that happens in silver. Commissioner Benham, if you were a constituent of the CFTC, how would you feel right now? In fact, I'm asking you, how should your constituents feel? How the people reading me, listening to me read this letter, how do you think they should feel upon hearing this information that I'm guessing most, maybe because they watch my channel, they've heard it before, some of the other people who spend their lives and go through risk and don't tax people to do it who explain these things. But I mean, the people who are watching CNBC, or better yet, the people who purchased SLV. I don't know if that's the CFTC's domain, but whoever regulates SLV, tell me about how your constituents, they're aware of anything that we've covered or will cover. There's still a bit more. We're on page 12 of 25. So I'll try to limit my sidebars. Has the CFTC ever explained, by the way, why silver fell from $21 to $9 in 2008? Anyone who bought the big silver short, by the way, thank you for that. You know the answer, but we'll cover it here. Because Bart also talked about how JP Morgan inherited a short position from Bear Stearns that was so large. He actually says at one point, I love the way he phrases it. He's like, well, I would never then or now talk about a bank and name it that was close to 40% of the silver market, but the public records show that it was over the position limit, that despite being a temporary waiver to reduce it, when they checked back in with Bart a few months later, instead they'd made it bigger. Oops. Which may not sound like a big deal and worth hashing 13 years later, unless you also consider that despite more historic interest rate cuts, failing banks, and physical silver demand to the degree that dealers could not get product, similar to now but more extreme, the price of silver started falling from $21 to $9. Not like a couple of months after that happened or a couple of weeks. I think it was Wednesday or Thursday. Of course, the Fed cut interest rates 75 basis points on that Monday. Which would have been, March 16th or 17th of 2008. Look that one up. I think at the time, that was the biggest single day. I don't think they'd cut 75 basis points before then in a single pop. But, well, of course, everyone's selling their silver afterwards. I can't wait. I hope some CFTC commissioner one day is saying, like, oh, this guy in Arcadia is a knucklehead. And, it's the... we're regulating the market structures. And there's not necessarily, in fact, actually in Gensler's thing, he kind of said that, whereas like, they said the price of physicals going up, but there's not necessarily a connection to the futures market. Okay. Well, there you go. That's why my suggestion, don't invest in the futures market if you, well, the problem is that everything is indexed off of that, which, Anyway, the following is a quote from Andy Schechtman, owner of gold and silver dealer Miles Franklin. Every major dealer in the U.S. in the industry was sold out of product, not just in the U.S., internationally. Every major refinery was sold out of product, had nothing to sell or offer. Every dealer on the certified exchange of over 1,500 dealers was begging anybody for product. We were getting phone calls from distributors across Europe saying their normal chains of supply in Germany and Zurich had dried up. Give Zurich their credit. United States Mint in 2008 shut down 6 or 7 times. The Canadian Mint and the Austrian Mint were working 3 8-hour shifts, 24 hours a day, and ultimately were anywhere from 30 to 50 or 60 days back ordered and wouldn't even let you take orders most of the time. The Rand Mint, by the way, that's stuff like that's happening again now. You see this coin behind my head, which I think is quite cool. I asked Andy if you could get some I want some, and certainly I'll mention them. And if you guys want to buy some, it's not legal financial advice, but he'll have them. But he said it's going to take 3 or 4 weeks to get them. So similar conditions. And interesting because also you saw what happened in 2008 and then how things kicked back afterwards. Anyway, Rand Mint in South Africa ran out of product. Perth Mint in Australia shut down in July or August. I will also extend a 100-ounce silver bar to whoever gets Dick Hayes to appear on the show and explain that, amongst other things. And but they took no new business. That was with the price of gold and silver plummeting. So prices going into supply should be overwhelming, and he mentions that by late 2008, when the price of silver was close to 9, the U.S. Mint finally came back online, but said that orders would take 8 to 12 weeks, and that Silver Eagles would cost dealers $17.50, almost 100% premium, and that was even before the regular dealer commission markup. Now, though, in full transparency, I do have a business relationship with Andy Scheckman and Miles Franklin. I don't think I've ever hid that, but I'll mention it again, and you can discount that one. I don't know. Maybe the guy says quotes like that in a. Well, let me just put it like this: I got to visit Andy. He invited me over last year when I was there, and his house is quite beautiful. I'm not trying to tell any details, but you saw his house today that he just moved into in Florida, and he was doing just fine financially before he ever heard of me. So. I don't think anyone thinks he's talking his book, but we'll leave that aside. APMEX, another one of the largest precious metals dealers, reported, I believe you can Google this, and found it on I think it was their website. Somewhere I found it. It's from the book. Global financial crisis of 2008 stimulated massive movements in the precious metals market. For example, the premium commanded by the 1-ounce American Silver Eagle rose to more than 80% over the silver spot price by late 2008, and the premium was still about 40% over the silver spot in early 2009. This happened, of course, at the exact same time JP Morgan was making its silver position, which was already over the limit following their deal with Bear Stearns, that Bart had said, all right, it's over the limit. Allow it, but you got to make it smaller. And what did they do? They made it bigger. And now, ironically, a couple of days ago, one of JP Morgan's options traders called Andy to buy silver. He said they knew he's aware of all the stuff, wants to leave the bank. Can't blame him. This is good. From JP Morgan. He's aware of it. What's he doing with his money? He's calling him Miles Franklin. Okay, so talk that book. This happened at the same time JP Morgan was making it bigger. Here's a great video, lays all that out in case you don't even want to read the darn thing. Did the CFTC feel that none of this information was material and would give a more full context to the market participants to understand what was really going on? Your agency didn't share any of these details before Bart's interview. You haven't commented on them since then, and no one from your agency has ever reached out to me to discuss, to learn from it. They didn't call when Bart Chilton interviewed. They didn't call when I even submitted evidence that explains what they can't, but they had to tamp down. And of course, no one from your agency has ever apparently even contemplated why someone would voluntarily leave a lucrative career on Wall Street to spend all their time researching this. Why do I do that? Maybe I'm just a nut job or something. But all the things I don't actually practice. I'm gonna practice my guitar skills in a couple of weeks. Why am I spending my time doing it? Why do you think somebody would do that? I can assure you is not so that one day I could find someone named Commissioner Benham and just give him a hard time. Promise you, that's not it. You get your lie detector test, Bible, oath, whatever. That's not the reason. Of course, if you're wondering what's the big deal about an oversized position and why that could have the potential to manipulate a market, here's what Bart Chilton had to say about that. Here's his answer there. I just loaded to the channel a half hour ago, too. Of all the shocking comments Bart made, perhaps most relevant to the current case at hand is how he responded when I asked him if my understanding of how the manipulation occurs, which he referred to as spoofing. You've seen this a bunch of times. I said basically, hey, if a price of silver is $25, $25.05, and it gets nudged a little, then you get the stop orders. Who knows where the stops are? Oh, the banks that are supposedly trading according to Blythe Masters, they're just facilitating their customers. Well, here's the thing. I went to Wharton, went to Merrill Lynch Chop Shop for a summer internship. Not bragging about it. I'm disgusted with both of them. All right, so I saw how it works. Here's what they don't. Here's what they don't tell you. And when I asked, Bart said, hey, they hammer the heck out of it. They know where the stops are. They know the chart patterns that tech guys are reading. I mean, that's what they actually know. If they ever applied that, they're good at that, like gaming other people and stealing. I mean, why not use that same energy to do something honest? It'd probably be easier to make a living than, I mean, the complexity of crime is in some ways impressive. But this is particularly important because while there were a handful of crimes that occurred on February 2nd, what Bart described at the heart of everything that happened, just to replace 26 or 25 or whatever number I said with $30, it describes exactly what happened. Called it in advance. Bart called it for, or no, I asked him the question and he confirmed it. So I called my shot 2 years in advance, Ross. Would you like to know how I did that? Would you like to know how? I don't know if I was technically right in my options expiration video where I said watch for it to close at $26. I'm not sure what time that actually is the cutoff. I didn't trade COMEX futures. I was trading equity options. So it didn't get back to $26 until like 10 or 11 o'clock Eastern time. So I don't know if that counts, but like, how do I know these things? Some dude with a laptop. I'm not working on a trading floor anymore, but not only did Bart confirm my interpretation of how the crime is orchestrated and understanding that I was able to arrive at, despite not having access to the CFTC's trading data or subpoena power, but he even went as far as to say the only difference between my description and then and what happens now is that now when it happens, the price moves even more. The time since then, I've talked with thousands of silver investors, and anytime I've ever asked someone why they think the price of silver fell from 21 to 9, aside from actually even I've never heard from, I don't know, maybe people have read the book where I've explained this, but every other time they said because there was panic selling, because the whole thing was melting down in 2008. And here's what I wonder. You think every single person who reads this letter or the final chapter of my book or watches any of these links, or especially this one was designed and this particular issue, put it in context and just what you've read so far, you think every single person who reads this letter is still going to say what happened there was panic selling? If there's someone who thinks that, please let me know. If there's someone, especially if it's Jeff Curry or Jeff Christian. I'm going to behave myself, though. Does any of this seem like material information that the CFTC could comment on if it really wanted to demonstrate transparency? I'm curious. Have the CFTC commission ever seen what Bart said? Because that's what happened, what he described. That's what happened on February 2nd. Most people are watching this. Most people watching this, you knew about it years ago. You knew about it before it happened. You knew about it after it happened. You knew about it before Commissioner Benham said what he said. You knew about it after he said. This is how the price of silver falls 10% in the face of arguably the greatest single day of silver demand in history. Any questions? I'll take a look into the chat room. Do we have any questions on that? I see questions for Commissioner Benham. So I think anybody's read this so far. I don't know what the counter argument could be. John Adams asked me today. He got a letter from Kitco telling him to stop talking. He's like, how come I haven't gotten like, I don't know. What legal action could someone accuse me of? Presenting the evidence, the truth? I'm using their own data, their own statements. I'm just connecting them. But that's how the price can fall 10% when London's worried about running out of metal, and the bullion dealers, you call Whitmire, Andy. I know if you email Andy, he'll tell you. I'm not making it up. You call James Anderson. Call fucking Santa Claus. Ask him. Call Jeff Curry at Goldman Sachs. All right, come on. I know it's Saturday night. I'm going to take a sip of water to be properly hydrated for the specialness of Jeff Legend as we dig in. So, un momento, por favor. All right. And also, I'm going to hold another Silver Mayan Aztec. By the way, honor of the holiday, I told Andy Sheck one of the first 100, and we were doing an interview on Rob Keats's show. I said I'll take another 100, so that's 200 ounces, and it's still. I forget to the end of this. I was busy writing this all day. I wanted to go shopping for more silver online because even despite the tamped down thing, I don't know. I bet on myself, but Jeff Curry, I bet it. I'd love to. So like a fantasy camp where we could all play poker against Jeff Curry. Well, let's keep going. Because the mysterious silver comments of Jeff Curry and Goldman Sachs is magnificent. Throughout the early days of February, one of the banks that was involved in this unusual sequence of events. By the way, if you're having fun, do consider hitting that share button so more people can join into the party. I mean, what if your friends right now are sitting at home and they don't know about Jeff or what at least will be sent directly to the CFTC commissioners? I'm tracking down the addresses and but yeah, hit the share button so everyone can join in. Don't be selfish. Because throughout the early days of February, one of the banks that was involved in this unusual sequence of events that might be worthy of further investigation by the CFTC is, of course, the infamous Goldman Sachs. By the way, here, I did put the link to Carl Levin talking about their shitty deals in Congress a couple years ago. And I made sure to get the right one so that the shitty deal isn't bleeped out, or you get the full, like, look of confusion on what's that guy, Daniel Sparks or whatever his name, the Goldman guy, like, oh, I never recall anymore. But hey, I don't care if Jeff recalls anything he says. The reason I did this, reason this is written as a report, I'm reading it as a video, I don't expect him to answer me. If I were you watching home, I wouldn't expect him to answer you either. But hey, these are the questions. I've called Goldman Sachs. I've told them what I accuse them of. Is there anyone I can talk to? They don't know. So here's the evidence. And when people don't want to answer it, I find that speaks loudly. So in an interview in the first week of February when Jeff Curry, the chief head of commodities for Goldman Sachs, authorized participant of the SLV Trust, also a member firm of LBMA, go figure. Remember when I was getting into finance, I was really intimidated. I didn't have much confidence as a kid. And so, especially at Wharton, like we'd have all these traders and bankers come down and give their pitch that all sounded exactly the same while they talked about how their culture was different. When Goldman came to town, biggest crowd of all of them, they didn't have the perspective. I'm like, holy shit, this is what everyone in the world is following. And I wait to hear what the Goldman's advising. In terms of thinking about how you're going to create when Jeff Curry, I want to go back, make sure I got this line. I thought there was clever delivery. Was asked about the activity in the silver market. He somewhat bizarrely mentioned the following. See, I wanted to get that in there. Thank you for your patience. In terms of thinking about how you're going to create a squeeze, the shorts are the ETFs. The ETFs buy the physical. They turn around and they sell in the COMEX to hedge that position like any other corporate. One problem is it's not a corporation. What hedging school did he go to? Where's James Anderson? Come on, buddy. I'm not sure that in my entire career I've ever heard of any other entity employing a hedging strategy like that. Because what is it specifically that Jeff Goldman and anyone else, whoever else is associated with the ETFs, would actually be hedging? Trust is a pile of silver. It's not corporate. It is literally holding the metal on behalf of customers. Rewind this again if you're watching at home, just so it's clear. Because investors buy SLV because they want exposure to the silver price, or they short it if they think it's going down, and they don't have the ability to tamp the price like Jeff and his friend. So what is there for the custodian or the ETF administrator or anyone associated with the fund to hedge? Check this out. This is special. Call Goldman, ask to leave a message for Jeff Curry because you have this. If you have this question. Not only doesn't the custodian, sponsor, or authorized participants have any conceivable legal or economic reason to hedge anything, because here's what I expect they would say. And I'll tell you now so that when they say it, you can laugh in their face and call them out on how they're lying, because they don't ever seem to admit when they get caught, but they just double down. And here you can have the re-raise ready for the double down. And if they triple down, just email me through the site or I'll make another video. But even if there was a hedge in between when iShares collects the money. So customer sends is $25 to iShares. Right now they have $25. They've not given they need the silver to give that exposure. So if anything, they would say, all right, I have $25. Silver goes up, I need to $26, then they owe $26. So if they're hedging anything, it would be a long COMEX future. Not short, but of course, the use of COMEX futures is expressly forbidden in our own damn prospectus. Oops. Jeff, would you like another crack at that one? So this is the trust does not hold or trade in commodity futures contracts or any other instruments regulated by the CEA as administered by the CFTC. I mean, you couldn't make this up. In fact, we'll get to the Goldman the position limits. I'll save the surprise. Won't jump ahead yet. Because, of course, this is the same Jeff Curry that used the Goldman Sachs brand on February 2nd and February 4th to claim that it's impossible for a short squeeze to occur. He went on the big channels, said it can't happen under the Goldman Sachs name because of position limits, yet he failed to mention how his bank routinely violates those position limits. And because, what was it, last month on the first day of the gold deliveries, they blew through it. I call CME, see it every month, and I'm thinking, there's a lot of technical stuff and lawyer. Maybe I'm looking at the guy's like, well, they either have a hedge exemption or they violated the limit. Okay, which is it? That's because it's not public. Oh, all right. These guys are this track record, not public. I said, well, all right. How do investors find out which it is? I mean, it would seem like material information, transparency. Oh, the CFTC monitors it. Okay, Ross, can you let me know if you monitored what month are we? I guess that would have been April gold deliveries, whatever it is, the last April cycle, and you see Goldman. Actually, here the link's in here. You told the whole story. You see the chart. You see what. Hear me describe who I talked to, what they said, came down to the CFTC. Of course, that leaves the informed observer simply to ponder if the reason that Jeff wasn't able to make a media appearance on February 3rd is if he was busy signing off on the legal language that his bank and others change in the prospectuses of SLV and several of the other silver trusts with far less media fanfare. Articles by Ronan the Destroyer on both of those that there, 100-ounce silver bar. Anybody gets Commissioner Benham to agree to read the Ronan the Destroyer articles, I'll pay for that video. Oh, okay. And then here, check this out. This is special because here's the silver futures. You see March. Goldman, the H, as confirmed by the CME house account. So this isn't for their customers. They can't use that weaselly excuse. It's for their own book. I means issued. That means they had to deliver. That means they were short. Now, I don't know when. Only the CFTC has the access to the trading records to look up when they actually said that. But it's actually possible that when Jeff was saying those comments, his bank was short. Well, right up to the maximum limit, fortunately, because it's 3,000 contracts. So they stayed under the limit, at least on that one. But they violate it routinely elsewhere. And they always use that hedge example. I would add that if you go through the COTs or the COT report each week, you can see that. I mean, it went the number that if you back it out, it went up a lot during February, then came back down substantially, like, I don't know, maybe they change what they're hedging. Is that if you can't even if investors don't even know whether they're in violation or if they have a hedge exemption, are we like late enough in the game? And maybe that's a policy. Okay, I call BS on that the Goldman's hedging. I don't think so. How do I? Who can verify? 100 ounces for anyone who can explain their hedge. Limit one per total. So I actually have had a couple. Actually, I won't put the formal offer there because unless I know who the judge is, because I've had a couple people tell me about the hedging thing. Then when I ask questions, they never explain that to me. So big hedge, and in the SIVR thing, it says they did have large short positions. They were afraid that the retail guys were going to pop them on it, just like they whoever was short in GameStop got popped on that one. Except they don't like getting popped, so they either have a conference in future, discuss how they're going to tamp things down. Apparently, Jeff didn't mention Goldman would issue 29.9 silver contracts, which means they may have been short when he made that statement. Commissioner Benham, will you explain how all of these data points are in line with a free and fair marketplace? Or otherwise, at least commit to properly investigating them. If that's okay, if all this is the CFTC is okay with all of this, And I don't know what is the SLV. Is that SEC, CFTC? I don't know. Let Ross figure it out. I did my part. I'm fucking tired being up late. What is it, 10:15 on a Saturday? Mom was here this weekend. Felt bad. I wanted to be spending more time with her, but I felt this was important, especially with this day coming up. So felt bad when she was upset a couple times, rightfully so, because I'm here sitting here typing and trying to balance that. Answer emails late every night. Okay, so if you guys are cool with this, say that. If you're not, investigate it. That's transparency. Here's another thing. I wonder what SLV investors would do if they heard this or if they watched that video. It must have been Sunday, February 7th, where I said, good God, here's some of the stuff that I don't think they know about. Did send that link to the CFTC as well. $304 million budget. Can't get an answer if they watched it. But in the midst of that, I actually called iShares on February 5th and since then a couple of times. And I really recommend to everyone at home, just write a little note. Call iShares. Go right on to Google iShares SLV. There's a phone number. Call them and ask them any of these questions. Not because you feel like it's a chore, but let's say there's one day, you're sitting at anyone still has a office job and you're a little bored. Just call them and ask some of these questions and watch them squirm. It's quite amusing. That's what on February 5th I called, because following the $61 million allegedly added on February 2nd, that Rob Keynes, former auditor, I forget which place, he came over, watched me fall off my couch that night. He's like, he couldn't figure it. He didn't think it was possible. David Morgan didn't think it was possible. I don't want to speak for anyone else, but long list of people. You can watch the darn show. It's all recorded. So neither myself nor any of my peers thought it was actually possible that they could have added silver to back the 61 million shares they reported adding to the trust on February 2nd, especially while the price fell 10%. I wanted to understand exactly what was implied when the trust reports adding metal, and asked, does that mean they could be working in order? They're sourcing the metal, or when the shares are added, did that mean they're obtained? The rep says yes. If they add shares, the metal's added that day. Repeated it. I told her I have a show. I don't want to get into any legal risk. Say things that aren't true. I go to great extent to say things that are only true. And if I'm not sure, I'll phrase it appropriately. When John Adams asked me why I'm not worried about the things I say, that's why. I just run my mouth day one on this stuff. But I mean, you ask these questions, you have the evidence, and they ignore it, then, I tried asking nicely. I don't know. People have been waiting since 1980. I want to get this. I want to return some honor and integrity to this market, with whatever ability I have to do so in my lifetime. And I think there's a lot of other people that feel that way as well. So iShares said it's added that day. When I asked who's responsible for adding this, the custodian. Who's the custodian? JP Morgan. I'm not hiding anything. I said, given that they just got caught, paid $920 million last year, do you see this as a conflict of interest? It's a lot of money being trusted with a bank that agreed to pay $926. This was less than 6 months earlier by the date of that call. When I asked her if she was concerned about that, she said she couldn't comment. A common theme that seems to keep popping up. Anytime I ask these questions to any of the banks that are associated with these products, none of them will comment. None of them ever said anything to me. I haven't gotten any letters saying to stop saying it. They just ask if they want to see the evidence I present against them. I'm showing them my cards. You're giving me a little credit. What the fuck else am I supposed to do? When I asked for a copy of the SLV audit, she told me that she thought there was something on the SEC's Edgar database. That was when I was like, whoa, this might be bigger than I thought. And I told her, I'm like, this trust just added 118 million shares that are allegedly backed by silver in just 3 days while the price fell 10%. And you just told me, and I said this to her, I'm like, and you just told me there might be something on the Edgar database. That was when I said, I can wait on hold, but please get me, all I ask is the information's accurate so I can report it honestly. Here's a question though. Would it be reasonable to conclude based on how that person responded that it's unlikely that many, if any, of the investors who purchased those 118 million shares checked the audit? Because I actually called back a couple of weeks ago. I still can't get it. It didn't sound like they were like, oh, yeah, all right. We had 100 people call today, all this mania that's going on. And you just send it right here. Call and ask and see if you can find it. They'll give you actually, here's interesting, as I mentioned in the report. Stop the sidebars there, Chris. Told a represented Silver Analyst Public Show, just 100% accurate. After returning from hold, she directs me to the inspection letter, which talks about the count, but of course is not an audit. All right, this sidebar is worth it. But when I called a week or two ago, I'm saying, where's the audit? They're like, they're like, I think there's something in 10K, and it directs me to 10K, like page 9. There's something where it references an audit. And the guy's like, is that what you're looking for? It's like a paragraph where it says something about PricewaterhouseCoopers and an audit. I'm like, no, I'm looking for the audit. Even the guy answering the phone, like they don't even know what an audit is at JP Morgan. Market expertise. So if anyone doesn't even know what an audit is, you're qualified there. So after 40 minutes on the phone, all I was able to get was an inspection letter, which interestingly, I went to the same place they showed me how to find it, and it's gone now. I have a copy of it. I don't know. Maybe it's still on there somewhere else that I can't see, but which shows that the last time anyone other than JP Morgan has put their name on anything even resembling an audit of the trust, it was dated March 20th, 3 days before the EFP market broke. I don't know, maybe a important date. Last time it was counted was March 6th. And here's the thing. Do you know what happened between March 6th and March 20th last year? Take a guess. Actually, I won't tell you. I'm going to let the suspense build, and then we'll have a chart. It might be, oh, look at that. Look at that. All right. There we go. We'll answer in a second. As anybody put last time, March 20th. So I'll ponder, pause the video and ponder what could have happened between March 6th and March 20th. By the way, when I said, this is a couple weeks ago, I said, well, should have been an audit done this year. And they said, well, because of COVID, we haven't done it yet. Everything because of COVID. Walked past the Treasury in Washington last week, asked if Janet Yellen was there, so I give feedback. But she says the Secret Service agents don't went in the Treasury right now because of COVID. Where are they going every day? U.S. Mint can't get the silver because of COVID. Anyway, this means the last time someone other than JP Morgan signed off on the metal being accurately accounted for was less than 2 weeks before the price of silver fell below $12, well below the cost of production, which was approximately $15 to $16 for most silver miners at the time. Well, once again, SLV reported adding silver to the trust. Maybe this is the half margarita at dinner talking, but I mean, come on now. Is there a concert that you could be better than this on a Saturday night? I mean, in fact, SLV reports adding to the silver to the trust even on the exact day when it falls below $12. But I know you're thinking, all right, he's got to be making this part up. But here you go, March 16th. Hey, it's coming from their own data. I will acknowledge it's possible I got their data wrong because listen to this one. Their file doesn't work on a Mac. I actually called and asked. I'm like, I have a Mac. I've been trying to download the data. I would always have to ask someone else for it. They're like, oh, it doesn't work on there. Okay. Hope none of their investors have Macs. So I had someone convert the data for me. And at least the file he gave me, I don't know, maybe typed over somewhere, but it looks like March 16th. Here's March 16th. The day there's silver $15. You look at their data, it says 378 million shares. Here's March 18th. It's down below $12. So now like mining companies are going to have to like pay money to go get it and pay taxes too. But they've added, what is that? Somewhere in there, 20 million shares, ounces. Keep in mind that those shares are like 0.93. And it's when you go through if you actually go through the prospectus and search for audit, you see a lot about audit fees. So that's where you're paying your 0.07 of a silver ounce too. I don't know, but I can't actually find the audit. And so how is it that JP Morgan is so regularly adding up large chunks of silver adding large silver to its trust, but when it does so, the price falls rather than goes up? How does JP Morgan regularly defy the laws of supply and demand, Commissioner Benham? I'm going to check over the comment fields here because I have a guess. Just a guess. No, I'm not saying this is how it goes down. This is just a guess, though. But maybe, just maybe, it's one of those things like, because Goldman Sachs is one of the authorized participants of the trust. Now, I know Jeff Curry was even able to, their scientists, even able to confirm that now copper has apparently overtaken silver. It's the greatest conductor of electrical conductivity. I don't know. Maybe copper's changed the laws of supply and dynamics somehow as well. Jeff Christian apparently has been watching. I'm honored. He didn't say he's been watching. He got my letter where he didn't want to answer if Jay Aaron was short in 1980, but which would have effectively invalidated the man's entire career if that single statement is true. I don't know. I asked him. Anyway, yet somehow this bank remains the custodian, not just for SLV. Here's another link to Ronan the Destroyer's article. I would love to see someone try and refute that. Jeff Christian backed out of the interview when Ronan showed up on another channel a couple months ago. But for several of the other silver trusts as well, while no one from JP Morgan or iShares seems to be able to explain how the price of silver fell 10% while they reported adding a historic amount of silver into their trust. I know Jeff Curry said it wasn't that big, but the chart showed you it was record setting. When I asked iShares if that's a conflict of interest, they said they can't comment on it. I asked who can comment on it. They said they don't know. So perhaps say that there's a conflict of interest here, given the past history of the parties involved, would be a bit of an understatement. Not a lawyer. I don't know, but maybe Ross will explain that. Because even when I offered to wait on hold, I asked them to find out if there's anyone in their entire institution that's interested in the evidence I present publicly. When I publicly accuse them of fraud, they just tell me they don't know who to transfer me to. By the way, if you think I'm making any of that up, someone find out, call for yourself, or somebody who's a lawyer, figure out what are the rules that I can legally call and record it and publish it. I'll call, do it again. Or ask any of the people who came to meet me outside of the CFTC's office Tuesday, April 20th, when I came there trying to get answers. And, I did it on speakerphone and they heard it. So try it for yourself, though. But when I called iShares again a couple of weeks later, the person I spoke with directed me to a section of the prospectus. We mentioned that where they talked about an audit. But here's my question: is this really the best that Wall Street supposed finance institutions can do? I mean, when I was at Wharton, these were the banks they were bringing down, and everyone was flocking to. I got suckered into flocking to them too. So I'm not saying I wasn't fooled by this shit for a while either. But at least in my lifetime, all right, if someone's going to sue me or shoot me or whatever, take your chances. But I'd rather deal with that than see this and cowardly fashion just be okay with it. But I'm almost done wasting hour and a half on the phone with iShare. Unless I can record it and publish it so other people can hear it, so that their own investors can hear what they say when you ask them these questions. I'm not going to waste time anymore. Investor relations. No one was able to even find, by the way, at the end of all this, like 3 calls, I think, no one's been able to find the audit. I asked if they could call me back, answer any of these questions last time, 2 or 3 weeks ago, before I went to Washington. The guy brings a supervisor on. They're hey man, they're even telling me, they're like, yeah, these are reasonable questions. I don't know. We can take your number and call you back. Haven't heard back yet. Left a message for Jeff Curry. Haven't heard back from him either yet. Left messages for Ross. Haven't heard back from them. Gates Huron, lawyer for someone from the CFTC called my partner Yara, said, hey, we got your message, which means they didn't initiate the call. They were responding to a message. She says, yeah, we submitted this file. And they say, oh, the Arcadia file. It's like, yeah, have you heard of it? How do we follow up with? Gates Huron, call him. I'm saying, hey, did you look at it? Starts, well, you would think if we called you that you could imply that. Oh, I said, can I imply that? And he's like, well, I can't tell you because it's open investigation. I'm like, it gets really hard to believe that you guys are really trying to find this. And as soon as I mentioned that I've getting ready to begin legal action. Oh, and he can't say anything. I said that without my lawyer. I have a lawyer. I don't know, there's like a couple people I know over the years are lawyers, hoping someone will help if I ever need one. I don't know. I just say this. I say the truth. I hope we don't need a lawyer just to speak the truth in the United States. I hope all these politicians that campaign on cleaning up corruption, I don't know, I was not trying to brag, but the fact that I could have gotten a bigger payday on Wall Street, but I left. I didn't have an offer. I didn't have a law firm or another job lined up. I ended up driving a fucking taxi a couple of years later. And it's not disrespect for taxi, but just like, it was not an easy job. That was harder to get by than working on a trading desk. I don't know. I think it's important stuff. So I encourage anyone reading this to find out for yourself. I've called JP Morgan, Goldman Sachs, and iShares. None of them can explain how the price of silver fell 10% on the same day that their own silver trust set historic records for silver demand. Although I might suggest that reading through the changes to the prospectuses that they made on February 3rd, right as this was happening, will help answer most of the questions that you probably have. Because they won't say it to your face even when they get caught. But they tell their lawyers all about it and hope you don't find out. I did ask last time I called what efforts were made. Was there a press release? How did people know? She's like, well, if you go to the prospectus, you can see the date is new. Okay, so if investors want to stay up to date with your fraudulent piece of junk trust, they just have to check the damn prospectus letter every day between now until eternity. Maybe that's hard to do if they're working and actually getting money to invest. And they also have to check every single video in history to find out that Rostin Benham and somebody is tamping down and capping the price. Actually, you don't have to do that. You just subscribe to the Arcadia channel or read the link that's in the description field below where you can see the evidence I sent them on February 12th. I figured it out in 10 days. If they can't get it, do they want to ask for help? Call for backup? Got a week left. We'll get to that. These are licensed institutions that are selling these products, yet they can't even answer these questions, and they can't even figure out anyone else who can either. But if I hadn't raised any of these issues, how many people do you think would be aware of what they just read? Additionally, compare the text and writing style of the report you're reading now to the SLV prospectus and see if one seems like it's been designed to be easy to read, while the other feels like it's been intentionally written to make it as difficult as possible to actually understand the terms used. And of course, that were updated and changed on February 3rd, but not mentioned in any of Jeff Curry's media tour. Commissioner Benham, I don't believe these are all just coincidences or mistakes. Could these some of the reasons why the price of silver fell 10% on February 2nd, despite SLV almost tripling the previous record for one-day share additions? They would have if it hadn't been for Friday the 29th when there was 34 added. Otherwise, it would have been close to tripling because the previous record, as you can see on that other chart, was, I don't know, like 20 or 25. Doubled, tripled. You could have like 300 million shares. You could have, okay, what the LBMA said, they had 360 million ounces left. You could have 400 million ounces added. Maybe the price would still go down. And the CFTC, they wouldn't stop it. They'll not finish that sentence. In case you have not yet reviewed the evidence I sent in, but would like to do so now, there's the link. Anybody else at home? It's there for you too. Is your agency aware of this information? If you are, given your comments about transparency, why haven't you shared it? Whether SLV and the trust are under your direct jurisdiction or not, does this sound like a well-regulated market structure? Talk about the derivatives. So I don't know, SLV is a derivative of silver. Would you tell, Commissioner Benham, would you tell one of your own family members that these products seem safe and show no warning signs of potential fraud worthy of further examination given what you just read? We answer that. If one of your family members says, hey, I think silver is going to go up, Commissioner Benham recommend SLV after going through all these links and the evidence I sent. Would he recommend that to his wife or his parents? Or my mom's here visiting, I don't tell her to buy SLV. Commissioner Benham, would you do a three-way call with me and listen while I call and ask the question? You don't have to talk to me. You can dial in and hear me ask them. If you don't like me, you don't have to talk to me. I'm a constituent, though. A lot of other people have these same questions. I can't see any way in which just listening would interfere with the agency's investigation, and I'm confident that what you would learn. I'm damn confident that what you would learn would be directly beneficial to your investigation. I know what's for mine. And I figured this stuff out. You haven't. Or maybe you have and you're not telling. I don't know. But if somehow you feel otherwise, then that's another question I think your constituents deserve an answer to. We're getting almost to the end here. Page 22 of 25. A little hot, so I'm sweating and scratching, but if we're already coming down, we already made it to the Super Bowl and down 6 and Goldman's corners are looking weak, we'll make here. Here's another question. What exactly would JP Morgan have to do to get banned from trading? Like, did they kill someone or, just have SLV exposed as a fraud? I just want to know now, like, what is the metric before someone gets banned? Because with their track record, at what point do they fit into the category? You heard Ross talk about, certain people shouldn't be trading in the markets. But what point do they fit in the category of entities who have lost the privilege of being able to trade in the silver market? In case you're wondering how your constituents feel about JP Morgan's long track record of financial felonies, market rigging, and whether they have any place in an honest market, here's a petition with several thousand signatures that supports permanently removing JP Morgan from the gold and silver industry. Commissioner Benham, are these signs that further investigation into this matter is warranted? If so, fortunately, most of the details are already laid out in the 2 rounds of evidence submissions I already gave to your office on February 12th and April 6th. Ronan Manley of Bullion Star also did a brilliant effort at explaining how, typo there. Ronan the Destroyer of Bullion Star also did a brilliant effort at explaining how the Silver Trust accounting numbers leave a lot of unanswered questions. And I would suggest that it would be wise for investors and regulators alike to do their proper due diligence on all of these silver trusts before committing or leaving money in these products. At least as a silver analyst with 20 years of financial experience, including 7 years trading equity options on the American and New York stock exchanges, I wouldn't feel comfortable putting my money in there. And I sure wouldn't advise anybody else to do so either, despite being perhaps the biggest silver bull on the planet. Wonder if I've won that title. Well, I'm going to keep going now. I like a challenge. Yet somehow, JP Morgan remains a central link of the current silver market structure with apparently little or no oversight, despite their past transgressions. Helen Chaitman, who wrote a book called JP Madoff, that details JP Morgan's rather unusual arrangement as the sole banker, my understanding, not typically the way that's done, for disgraced Ponzi scheme financer Bernie Madoff. Check out, some of you saw her interview. That's great. Worth watching on Dave Janda's show. She says Madoff was not as big of a crook as JP Morgan Chase because JP Morgan Chase has pled guilty to 6 felonies just within the past 5 years. Major felonies. I don't even know if that counts. I guess they haven't technically said anything about silver since Blythe Masters. So I don't know, is that one of the 5 or 6, or is that going to be added, or are we waiting? How long is it going to take the court system? Right, how many people are going to lose money? How many have money stolen while we wait for the court system? Michael Novak. Okay. What was the board of the LBMA, JP Morgan? Can he answer these questions? Can Jamie Dimon answer these questions? Can Blythe Masters answer these questions? Who can? I can. Can you, Ross? Can you disprove what Helen's saying? In this case, despite that track record, they're the custodian not only of the SLV, but most of the other silver trusts around the globe too, which is kind of, I was stunned when I saw that. And at least according to iShares, no one has provided any oversight of JP Morgan's accounting in over a year. Swell. What could go wrong? Well, here's my question. Could this happen again? whatever it was that you referenced was the dangerous situation that was avoided. Could it happen again? The LBMA mentioned that if the demand continued at that pace, it would wipe out their supply. They didn't think it would continue, though. But what if people do read their report and realize just how vulnerable this market has become, and people do start buying again? If that occurs, will the price be tamped down? Next time people buy silver, is the CFTC going to tamp down the price? I don't know. I'm trying to do my job. I speak to a lot of silver investors. I'm trying to understand what are the steps in place to make sure that the transparency about those questions gets out. Ross, if you're willing to come on the show, be respectful. Any of these questions you're willing to answer, we can do a round table not a round table. We can sit here for hours, as many of them as you want to answer or explain, whatever format. Fine. Don't even have to come on my show. Go on any show. Make your own video at home. Any of these things you can explain. Can any other CFTC commissioner answer these? Can anybody from JP Morgan or Goldman Sachs answer these? CME. Actually, I have a guy on, someone I know knows someone from the COMEX that apparently agreed to do an interview, ask for questions. Well, I'll ask some of these, see if he wants to take a shot at it. That's what I'm wondering. I don't know. Because that seems pretty relevant. Why else buy silver if you know that the government's going to or whoever is going to tamp down the price? The market structure is designed to tamp it down automatically. And there's all these features in place to make sure it doesn't go up. Why buy silver? And can we at least be honest about it, though? If there's a price cap on silver, can the government, for the first time, maybe ever, be honest about it? When people have heard me say that I'm getting ready to leave the country for the second time, this is why. Bad enough that the shit happens. But then when they get caught, the bank, no one can ever just say, oh, all right, I'm guilty. It's like the baseball players. That's why I don't care about baseball anymore. It's fine. You submit it. But think about the PR of like someone be like, you know what? I shouldn't have done it. I did it. I got caught. I'm sorry. But when it's always like, oh, well, it's this guy's fault. The supplement, this or that. Lost it in the sun. The silver bar hit me over the head. Couldn't find it. Lost it. The dog ate my COVID, ate it. Somebody let me know. But here, I'll finish this up and go bed or whatever else people are doing on a Saturday. You go buy some silver. Excuse me. Okay. It's not COVID. I'm going to live. Will you explain your comments, Commissioner Benham? Commissioner Benham, I implore you to explain your recent comments to your constituents and also provide an update on the evidence I submitted. The CFTC really does want to be viewed as a transparent agency by the participants of the silver market. That's how that can be achieved. I don't expect the guy likes me or probably wishes I didn't exist. I can understand that. I get it. You can like me. You can like the questions. Jeff Christian can dance upside down or whatever. Here are the questions. They're the data. Government can use force against me or try and audit me. It doesn't change the questions. You can do whatever you want. Can tell people you're going to fine them if they say 2 + 2 doesn't equal -13. Can make a government decree. Maybe you can shoot us all. Anyone who talks about silver, anyone who buys silver, the government can use. I don't even talk like that. That's how I feel after I read and see what happened to Aaron Russo, see what the pattern of these agencies and these government institutions. When people ask me if I own a gun, they're like, you don't own a gun? It's not safe. Why? Because I tell the truth? Of course, I fully understand that you and your agency continue to ignore me. You can ignore this message. You can ignore your constituents. You can stay silent. However, that's why I'm sharing this letter with the people who come to me for honest and genuine research about the silver market. While we'll also be, I think I'll just submit this directly as another round of evidence to the TCR program, typing all week. Definitely not doing it tomorrow. Spend time with my mom rather than try and do the CFTC's job. And I did this so that everything is clear, public, and on the record, so that it is transparent. I understand these aren't easy issues to figure out. I've had to spend the last 12 years researching them with my own funding, often at great financial risk. And I still went to the effort to make sure that this was all written down clearly and submitted through the proper channels. And description field below, you can read what exactly was submitted. So that if the CFTC's investigation was unable to uncover this information on their own, at least there's a way they could call for help. I've been called multiple times, emailed. Yeah, I've been less and less friendly the last couple of times, but I'm tired of asking nicely. I'm really fucking tired of it. Partly because I speak to other people who are really tired of getting ripped off. And everyone says the CFTC is going to protecting them. Well, the people who actually have been there and seen it up close, this is what we know. If there's something that explains the recent statements, please clarify that now before further time money is wasted. Because this is waiting for the answers. I'm personally done doing that. And again, to be clear, as I'll mention in a second, I'm not going to do anything outside of the law or violent or only peaceful. I make videos connecting the reading reports of the banks, what they admit, and the commissioners, what they say about it. That's it. Nothing other than that. We write a song about it. Is that illegal yet? I don't know. If you're able to sufficiently answer these questions raised in this letter in an open and transparent manner, which is what he promised, I'll be happy to continue assisting the agency. Despite my feelings right now, if I have people that have in situations far more important than this in my life, have seen that when I've said something like this and said, hey, if you show you're actually doing the right thing, I'll apologize, wipe the slate clean, and I will do that. Anybody in the audience can hold me to that. I don't think that's going to happen, but however, if you have not responded in sufficient fashion by the close of trading on Friday, May 7th, which is this upcoming Friday, then I will no longer cooperate with your agency, and I will reallocate my time and energy towards exploring legal and public media relations efforts. Hopefully that won't be necessary, because if we all just want a free and fairly regulated market, I trust that all resources and energy can go towards obtaining that. As always, the choice is yours. In either case, I will continue to report the situation truthfully, honestly, and in transparent fashion. P.S. Gonna leave this out. I couldn't help but notice the irony of the timing of the letter the CFTC sent out regarding a need for whistleblowers on the exact same day as I'm finishing this letter. By the way, in case anyone's hearing me the first time, Arcadia Economics is my site. I've also started something called the Silver Industry Integrity Committee, specifically to deal with issues like this. So this will be a big first step. Second step. It is 100 steps deep, but anyway, I couldn't help notice the irony. They sent out a letter. Philip and Co. Whistleblower term. CFTC sent out a reminder today that the whistleblowers are needed and valued. What types of misconduct should you be on the lookout for in commodities and derivatives markets? Corrupt practices that impact the price in commodity markets that drive U.S. derivatives prices or that are used to manipulate benchmarks. Anyone think anyone there? Corrupt practices used to misappropriate material non-public information. Did Jeff win that one? Corrupt payments used to secure business in connection with regulated activities like trading, advising, dealing with swaps paid out funds investors believe are being used to invest. I wonder if iShares counts when people they say like audit fees, but there's no audit. But in either case, they're looking for whistleblowers. And given where this matter stands, that let's take a quick look. There's 700 people still watching live. I've been going at this for almost 2 hours. Friday night, no less. Well, let's get our screen back. So given where this stands, I do agree with your constituents who have expressed here, and that I might add, this is where I tweeted out. I asked other people if they feel that my conduct has been worthy of winning the prize, the whistleblower prize. I've submitted the evidence. I don't know, a couple hundred people retweeted that, expressing they were, regarding whether my contributions to the case are worthy of the CFTC's whistleblower award. And I'd like to hear an update on that as well. Went to great expense and effort to be able to write this report. Not just that I wrote it. I mean, there's a lot of things that go into knowing these things. I just find it somewhere. It's a great effort to do this, though. Make sure this and to make sure this information would go out to the silver market participants. So when I spoke to, I'll leave him nameless, but an executive of a silver mining company, the one's been around for a long time. I was asking about this stuff because I get people ask me all the time, how come the mining companies don't do anything? And it's a substantial company. You would know the name. Been doing this for a long time. He's like, hey, my job is to get silver out of the ground as cheap as possible. It's like, what can I do? Well, now those people that have been cheated and stolen from, when this letter is sent out, I don't know, anyone in my audience, certainly there's a list of people that will be receiving this directly. I don't know, Silver Company, First Majestic, Keith Newmeyer, I don't know. What should he do upon receiving this? I think there was a lot going on with that short position on First Majestic on February 1st and February 2nd as well. But I'll look into that. See, I don't know for sure. When I don't know, I say it. Lastly, before we wrap up here, I give anyone full permission to reprint or use any material in this report, the video, and the links contained within. All I ask is that the information is presented in a way that clearly conveys the underlying intention, message of what I was saying. If it does, make memes, you make videos, knock yourself out, do anything. Full permission. Just in case anybody's wondering whether I've been talking my book, I hear that phrase a lot. Anybody want to bet that I have emails sitting in my box? Companies that have been wanting to pay a lot of money to come on the show that I haven't responded to. And this happened a lot in February as well, because my primary focus was the research. Hey, I had enough money to eat food, take care of my dog, and do this. That was what I cared about. So if Jeff Christian or anyone wants to challenge my credibility, put some silver on it, and I'll back it up with evidence. I'm not saying this because I have nothing else to do. I'm saying it because I feel it needs to be said. This is why. And I think anyone invested in silver, anyone who's just honest and cares about doing things the right way should be aware of this. And that said, I thank you for being here. Hit the subscribe button, the notification bell. Go out and celebrate the 10-year anniversary. Last time silver hit to $50 and then got torched in the middle of the night. A very similar scheme to what you just heard described here. Well, for everyone who's wondering if this is going to continue on and on indefinitely, well, I don't plan on retiring next week, so we'll see how it shakes out. Thank you. I love you. Good night.